all-time high in case of gold. What is your expectation? Where are we headed for the very near term, for this week, slightly longer term as we are into festivals, and there's an expectation that you might see some bit of a physical buying coming in?
Well, at the moment we are talking right now, and I'm just seeing that the German bond yields, 10-year bond yields, are at minus 0.61. So this is a clear indication. The bond yields are continuously falling in US, in Europe, in Japan, clearly indicating a slowdown or a recessionary fears ahead, and that is clearly reflected in gold prices. We are seeing a continuous uptick in gold prices from $1,300 to $1,525, and still the rally continues. So I believe that most of the people will figure it out that it's already run up too much and let us wait. But the fact is, there is no halt in falling bond yields across the globe. There is no abating fear of US-China trade war. So there are no reasons that things are looking rosy from the global economic point of view. So I think that gold and silver rally is likely to continue going forward. Even at these levels, I think that there is still scope for the further upside in a short term, and definitely on the long term. Global economy has entered into uncharted territory, and there are no easy answers available for the problems we have developed over the last 6 or 7 months. And I think we are going to see $1,600 by Diwali for gold conservatively, and same for the silver. We are going to see another dollar upside coming on COMEX, and at least 2,500-3,000 rupees upside on MCX.
Kunal, I like it when you say conservatively, and even when you're giving all-time high levels yet again in case of gold and silver prices. Coming on crude as well, because we've seen those prices continue to decline, and it's still trading below $60 per barrel for a third straight day now. With all the macro fundamentals that you pointed out for gold actually are bearish for crude as well. Are you looking at further declines there?
Well, I think I'm really worried about what is happening in China. I think one should keep a very close eye on interbank lending rate over there. The lending for the small institutions have halted, and I think this is not a very good sign for Chinese economy. Remember, China accounts for 1/10 of the global oil demand. So 10 million barrels of oil demand. Talking, and if Chinese economy slides further, which looks very likely going forward, so I think even oil is not going to be is going to remain under pressure. When you look at what's happening on the production front, US production is already at all-time high of 12.2 million barrels, and Chinese demand is likely to go down. You are going to see the oil-producing countries' demand also going down. So I think that there's going to be another slide in oil prices. Brent oil is likely to test $55 in this week only, and I don't see any respite, in spite of the fact that Russia and other oil producers are continuously pulling oil out of the market. So we've seen in the last 2.5 years almost 2.5 to 2.6 million barrels of oil being sucked out of the market by OPEC and Russia. And despite that, oil prices are at $58. So I see clear sell-off in oil prices going forward, and I think it's going to worsen going forward. So not to do bargain hunting, looking at the way the prices have corrected, I think still it looks weak, and we are going to see $55 in near term for Brent.
Incredible. 38,500 on gold in rupee terms, in dollar terms, it's top $1,520. It's a 20% rally that we've seen so far this year. Numbers coming in from Ipca Laboratories also looks pretty good. There is a revenue growth of 23%. There seems to be some margin expansion because there is no one-off which explains this 89% increase in the company's profitability. We'll await some more clarity. Yes, EBITDA has gone up in absolute terms by close to about 67%. So the mid-cap numbers which have actually come out so far in the last 1 hour or so have been pretty okay, whether it's Solara Active or it's Ipca Laboratories. These numbers are looking pretty healthy. With that, it's curtains down on Halftime Report. Business Lunch will take the market action forward.
सुनो हाँ? इसमें ऐड स्किप नहीं कर सकते, पता है क्यों? क्योंकि इसमें ऐड है ही नहीं।
Guys, remember this? Reunion, please. Hotel in Puri. Let me check on Trivago. 4 rooms, 10,000 per night. Highly unlikely. Oh, wait, wow. Guys, check this out. With Trivago, I can easily search for a hotel based on all our needs, compare prices and select a great deal for us. Hotel? Trivago.
Every morning on CNBC TV 18's Bazaar Morning Call, data gets transformed into expert insights that drive decision-making.
I don't watch business channels. If I do watch, I watch CNBC.
Any market moves because of liquidity.
The Asian screen is green.
The market has done remarkably well.
Stocks expected to be under pressure today.
The market is heading up.
For policymakers, CEOs and decision makers.
The first channel I put on is CNBC TV 18 because I want to know the business news.
From minute-by-minute analysis to expert inputs and global views, you get the news before it hits the trading floor. Bazaar Morning Call. At these times, only on CNBC TV 18.
That's all it takes to decode the markets and macros. 1 hour, that is really all it takes to understand about policy and politics. 1 hour is what we use to give you stories of global significance. 1 hour is all you need to get insightful, in-depth and accurate information about everything that you need to know. Join me, Shireen Bhan, on India's most comprehensive and award-winning news show,
India Business Hour. At these times, on CNBC TV 18 and CNBCTV18.com. This is TV 18 and you're watching CNBC TV 18.
Brought to you by Peps, the Dream Makers.
market pulled down by weak global cues and as Street awaits some announcement from the government. Weakness in a clutch of heavyweights like HDFC Twins, Infosys and ITC drags, and even as Reliance powers on, while mid-cap index stages a big underperformance today.
Reliance shares staged the biggest one-day rally in a decade on news of deleveraging plans, the Aramco deal and listing timeline of RelGeo and the retail businesses. Telecom stocks like Bharti Airtel and Vodafone Idea face the heat, as do cinema shares like PVR and INOX Leisure.
In results reactions, NTPC and BHEL take it on the chin after both report disappointing earnings. For NTPC, higher finance costs dents the profit, while BHEL reports a loss on an operational and bottom level.
Other earning casualties include auto ancillary majors Motherson Sumi and Bharat Forge. The only bright spark in Q1 comes in from Godfrey Phillips. The company reports a big beat driven by a 40% surge in cigarette revenues.
Hello and welcome. You're tuned into Business Lunch. I'm Nisha Podar and with me as always Sonia Shanai. Sonia, good afternoon. It's a weekday of market today. It's just Reliance Industries which is a big contributor, but Nifty 50 above that 11,000 mark. But it's the mid caps as well as the Bank Nifty which are really underperforming. The key is to down 1.3%, in fact is dragging lower at lunch hour as well. As far as advanced decline ratio, the market breadth is concerned, heavily in favor of the declines at the moment, Sonia.
Absolutely, so whatever a little bit of headroom we made over the last, say, couple of days. In fact, in the last 3 or 4 trading sessions, the Nifty has put on weight of almost 250 points, but that rally has gotten sold into. It's been a sell-on rally market for the throughout the year, so that strategy has played out today as well. Just a couple of more stocks. Yes Bank is actually sitting at a fresh 52-week low right now, so it's down almost 8%. It's lost 60% of its value this year, and it's been under tremendous amount of pressure, dragging
lagging the overall market. That's actually taken the Bank Nifty down almost 400 points as well. But on that note, since we're talking stocks, let's take a look at all the top stocks in focus this afternoon. Reliance undoubtedly is the stock of the day, recording its biggest one-day gain in a decade on news of deleveraging plans at their AGM. The stock is up over 10% right now.
Now, from gainer of the day to the loser, Bharti Airtel shares under pressure after Reliance announced the commercial services launch of Jio Fiber on September 5th.
And from the pharma space, Sun Pharma is in focus ahead of its numbers. The company is expected to post a revenue growth of 13.2% year-on-year.
In auto ancillary space, Motherson Sumi tanks in trade on the back of its numbers. The margins are lower by 210 basis points on a year-on-year basis. All right, so those are the important stocks in focus. But the big mover of the day has to be Reliance Industries, which posts the biggest one-day gains in 10 years after the AGM announcements made yesterday. In fact, Sonia will tell us the key highlights and what the street is also making of these big plans. Sonia, many upgrades also coming in.
Absolutely, a slew of upgrades coming in post the AGM yesterday. So the three key announcements that have led to the up move in the stock. One is that the company plans to become zero net debt over the next 18 months. So by March 2021, from 1.5 lakh crores of net debt, there's a clear roadmap to become a zero net debt company. Now, how do they plan to do that? Of course, part one has been done with the Saudi Aramco deal. The Aramco deal, which is valued at $75 billion, is higher than what the street was estimating. Immediately, of course, there's an inflow of $15 billion that comes through, which will help them retire their debt. Apart from that, there is also a listing of Relgio and Reliance Retail that's planned within the next 5 years. Before that 5-year landmark, there is some negotiations are on for a strategic stake sale in Relgio and Retail as well, which will help them offload some more of their debt. So these are the positives. Now, a whole host of brokerages have upgraded the stock post the announcements. Macquarie has upgraded it to an outperform, raised the target price to 1370. They say that the Aramco transaction will serve to allay concerns on the growing net debt. Kotak also upgrades it to a buy, raises the fair value to 1425 for the stock. Morgan Stanley says after the fall that Reliance has seen, it's a time for long-term investors to relook at the stock. They say that the cheaper ethane feedstock could drive an upside in PE along with faster asset monetization. And finally, Credit Suisse is the only one that remains underperform on the stock, but they've also raised their target price. They say that the Saudi Aramco valuations are much higher than estimated. They were estimating $61 billion as the enterprise value. It's come in at $75 billion, which is a positive surprise.
All right. So thanks, Sonia, for giving us all those details of what brokerages are really making of this. But of course, remember that $15 billion, once it comes, is going to be staggered in terms of the payment. So there are other aspects like Reliance Jio and retail monetization, which will also help in making this company zero debt. But remember, the telecom is the big focus, and telecom stocks like Bharti Airtel are under pressure following Reliance Jio's announcements, remember, especially on the fiber business, because that could lead to a tariff war. Reema Tendulkar, our in-house telecom expert, is right here with the analysis. Reema.
Impact on Bharti is an account of two factors. One, Reliance Jio's broadband foray, and secondly, its focus on postpaid subscribers. So here's what Reliance announced in its AGM on its broadband business. Commercial launch 5th September, pricing at 700 rupees per month, going up to 10,000 rupees per month, though the base price of